Good afternoon. My name is Dietwald Claus. I'm the founder and CEO of Cannamerx, the Cannabis Mercantile Exchange. And I would like to talk to you today about a topic that is very close to my heart, and that is broken markets and global supply chains. Some thoughts about the future of the international cannabis market. And I apologize to the translators in advance. I haven't lost my German accent after 25 years in Canada. So please bear with me. So the first topic, a little bit about Cannamerx itself. We are the fully automated auction trading platform for the global legal cannabis industry. We have been active since 2017. We have 80 plus participating Canadian and global companies on our system. We have transacted more than $5 million in spot market transactions. We have received more than $23 million in binding bids and helped facilitate 25 tons of cannabis and cannabis flower equivalent since approximately June last year. So what I would like to talk about is the structure of the cannabis industry. And I think it is a topic that's sometimes talked about, but I don't think it's talked about enough. And it's the legacy of prohibition. The prohibition that lasted several decades, 80 years by any count, that prevented a mature cannabis industry from developing. As a result, unlike in other agriculture industries, there's little to no really good research and science in publicly available publications, few specialized market participants, few best practices, whether it comes to production, processing, manufacturing, marketing, transport, finance, insurance, legal or trade, and few human resources. I'm not saying there are no skills of this kind, but they are few and far between. And the reason for that is that during Prohibition, there were no official standards, there were no official licenses, there were no certificates or universities that would teach something. So anybody with a little bit of horticultural knowledge and the willingness to risk a criminal case could go into the cannabis business and to do his thing, which means that some people did a really good job and really cared about the product, and other people didn't care about anything except turning quick profit at any cost. The result is that when cannabis became legal in Canada, there was very little that was available in other agriculture industries. There were no supply chains, no global supply chains that you could rely on to produce product. The government didn't care about the economics of it. The government cared about diversion of the product into and from the illegal market and not about the economies of cannabis. And because there were no external supply chains, companies were forced to build their internal supply chains. They had to do everything themselves. So we're in a situation that would be absurd in almost any other industry. Imagine Kellogg would grow its own corn, would ship it in Kellogg trucks to a Kellogg elevator, then put it on a Kellogg train to a Kellogg elevator, a mill, then they mill it and then put on another Kellogg truck to the Kellogg facility where they make the Kellogg cornflakes, and then they put another Kellogg truck to the Kellogg cornflake store. That's not how supply chains work. That's not how economics works. That's not how specialization works. That's not how a profitable business works. But it was a solution. It was a solution to a situation that needed a solution. And some companies, I think, have the feeling that internal supply chains are the way to go. There are some companies that feel that having complete control over your internal supply chains is a great thing. You can control the quality, you can control your planning, you can control everything. What could possibly go wrong if you control everything? Well, if it was such a great model, there wouldn't be a need for Cannamerx. I could go home, probably study economics as my professor always wanted, and you should probably look at selling out to some Canadian multinational and no longer bother about this because vertical integration is the thing to go. But it isn't. In 2016, I had a meeting with a gentleman who runs a now extraordinarily large and successful cannabis company. I talked about different things, and he said, what is needed is a trading platform. I said, why? He says, because there's a lot of trade going on between licensed producers in Canada. Several $100,000 a month worth maybe, not a big thing, but considering they were producing like, what, 50, 60 tons a year at the time, That's a lot of product that is being traded between vertically integrated companies that have full control of the supply chains. clearly the internal vertical integration doesn't work. Otherwise, they wouldn't need to trade. Because the problem with that is, if you're fully vertically integrated, you become inefficient. You don't specialize. You want to do everything yourself, and you can't do everything well. You have reduced innovation. You lose opportunities. You don't even know if you're doing as well as you could, because who do you compare yourself to? Another closed garden company that does everything internally, and all you can look at is how much profit they make at the end of the year. But that's not a good enough measure, because you don't know if you paid enough for your resources or too much for your resources, or you could make more money otherwise. And of course, supply shock risk. If you run your own LP and you have 1 million square feet of product growing, and suddenly you have mildew in there or something else, there goes your planning. There go your commitments to the buyer. It's gone. Because you can just throw it all out. And it's not like that hasn't happened before. It's nobody's fault. It's just what happens in agriculture. Things go wrong. So you have vertical integration that's inefficient, that also leads to something else that is even far worse for the industry as a whole. And particularly, and this brings me to the topic here in Colombia, you get to market concentration and monopolization. Because the one advantage an inefficient, vertically integrated, closed garden company has that follows the government guidelines and costs a lot of money to build is barriers to entry. You need $10 million or something, maybe the numbers have changed, to even start in the cannabis business as a supplier. And that is for a plant that I've been told is relatively easy to grow if you don't care too much about how well you do it, but you just want to extract it. But there's huge barriers to entry in getting to the market, because vertical integration is extraordinarily expensive. You have to grow, you have to process, you have to do everything yourself. So you have monopolization. There's a few big companies that seem to own the market and seem to want to take over the market because they can, because vertical integration is a thing. And here's it. And as much as it is disadvantageous, the tendency towards vertical integration is so powerful that sometimes it has to be legislated against, like in California, where they don't want the vertical integration because under the current conditions, as I said, the lack of resources and knowledge and human resources, etc., simply make it short-term very attractive. So, what does this mean for Cannamerx and for trading? Well, I think the other problem you have with this, what I just talked about, is pricing. You don't know what things cost if you produce them yourself. You don't know what they cost relative to something else. You only know what it costs you to produce them. But that's not the price of a product. That's simply your cost of producing. Nobody knows what the price of cannabis is. Can anybody of you tell me what is the price of cannabis? Exactly. And what? And what cannabis, right? Exactly. So there's these gentlemen out of US called Cannabis Benchmarks, and full disclosure, we work with them and share our data with them. They're good guys. They come from the oil and gas industry. They know how to read markets, and they came up with a definition of outdoor, greenhouse, indoor to differentiate between cannabis. They looked for something to make it work. They looked for something that is a differentiator. But I'm not sure that makes sense, because cannabis, the measure of cannabis per gram, I don't think makes much sense. Look at the oil industry. Okay, I unfortunately can't show it to you because I didn't get around doing the presentation properly, but there are like, what, a dozen oil prices out there for different kinds of oil, because oil is all different. It has different chemical profiles, it has produced at different locations, it takes different distances to bring it to market. And therefore, the oil price is anywhere between, what is this, $74, $52, $63 or something per barrel. But you have a bit of idea because you look at it and you realize what kind of oil you're talking about. And early on, I forgot who did the presentation, we talked about the different chemical profiles of cannabis. And I think that one thing that has to happen for the industry to become more mature is fundamentally commodifying. Turn cannabis into a commodity. And I know that some people don't really like that. The old cannabis culture doesn't like the idea of commodification. Commodification strikes off huge international conglomerates. It strikes off the ABCD traders who take everything over. And cannabis is often seen as special that can't and shouldn't be commoditized, but it's some kind of art, it's some kind of special crop that follows different rules than other agriculture, and I disagree. Fundamentally, it's an agricultural product. It's grown like agricultural product. It's grown like corn or like soy, or you can grow it like salad in a greenhouse. Don't want to offend anybody, but fundamentally, that's an agricultural or horticultural product. And it can be commodified. You can price it. You can categorize it. And there's nothing wrong with that. Commodification, unlike some people believe, doesn't lead to the end of independent businesses. Just because wheat is commodified doesn't mean there aren't independent bakers who make artisan bread. Doesn't mean that there are not independent organic farmers who work on a relatively small scale. What commodification does, it creates transparent prices. It gives you an idea what things actually cost. Not in terms of your cost of production, but what their value is. There's a huge difference between cost of production and value. Just because in Colombia something costs 20 cents to grow, doesn't mean it's worth less than something in Canada that costs $1 to grow, if it is chemically and phytochemically pretty much the same product. Your cost of production has nothing to do with the value. The value comes from the final consumer, how much they are willing to spend on a product. But in order to plan as a farmer, in order to plan as a processor, etc., you need to know what things cost. You need to know for how much you have to spend to buy it, if you know for how much you want to sell it. And you can't do this if everybody has just per gram prices and you have to call them individually. What kind of product do you have? How much does it cost? What is the THC and the CBD profile? There's only so many phone calls you can make at any given time. What you need is a forum, a public forum, where everybody can make their products available and exchange. Just like you have in oil, just like you have in grain, just like you have in iron or any other natural resources. And here's something else that commodification actually can do, doesn't have to, but can. It can limit concentration in the industry. And that may sound counterproductive, but it depends how you structure the commodification. The one thing that, if any of you work in agriculture, and all of you do, since you're in the cannabis business, you know that it is very difficult for a grower to get a good price when they negotiate one-on-one with a buyer. Growers grow. Growers are farmers. They're really good at that. They're not really good at negotiating prices. It's just not their skill set. They do this, 2 or 3 times a year at most, sometimes only 1 time a year. They have to get rid of their harvest, and they get a deal from some big buyer, and this big buyer is paid to be a good buyer. That's his job. He can railroad an inexperienced buyer, or even a semi-experienced buyer, into giving him less than the product is worth, because you're all dealing one-on-one. And what that leads to is that, for example, in a country like Colombia, where you can produce low-cost cannabis, you will have a problem, because you don't produce low-cost cannabis to sell it for little money. The goal of producing low-cost is to make a lot of money by selling at a higher price. If you grow for 20 cents, you don't want to sell for 25 cents. You want to sell for the best price you can get. But without commodification, without benchmarks, without knowing what something costs, you will have some northern company come here and give you a deal, said, look, let me make up a name, Miguel, you can grow for 20 cents. I give you $1 for the gram. And Miguel is happy. Why? Because getting 5 times what you have as a cost of production is a really good deal. Objectively, in any other industry, it would be fantastic. But think about it. In Canada, you can pay $13 for a 1.5 gram joint, pre-rolled, at the legal retail store. And there's a huge difference to $1, okay? So the problem is, of course, that the people who grow the cheapest, they will be the ones the big buyers go to first. And they say, hey, Miguel, I'm going to buy all your harvest. Give me a good deal. I'm going to give you $1. I'm going to give you 95 cents. And that's awesome. Of course, he is happy. So they have their first lot filled. The biggest need is filled. It's a marginal cost. All right? You have your most priority filled. Now you have more time to actually negotiate other people down. So you go to the guy who maybe produces for 60 cents. And now you can negotiate him down for 80 cents because you're no longer as urgent. And he makes even less money. So what happens in the way the business works right now in most agriculture, the cheapest producer ruin it all. They ruin it for themselves and they ruin it for everybody else. And in the end, they concentrate because the more expensive producers can no longer keep up with the low prices of the low-cost producers. They get the lower price, they have to sell out. In the long run, you always will have people fail and more successful people grow. But the point is, you lose the value. If you sell for as cheap as you just can afford to sell for, you lose the value. And that is moved up the supply chain. And you get concentration on the growth side, which reduces supply, which reduces variety, which reduces innovation, which reduces variety, and any economic system is just like an ecosystem, does best when there is variety. So how do you solve that? You solve that by having people compete for your product. By having a way to get more than one buyer bid for your product. Not like it is today where the buyers come to you, but you simply tell the buyer, oh, you want to buy my product? Bid on it through some kind of neutral platform. Cannamerx. I mean, I do tout my own service here. That's the whole point, but I also want to explain what the logic is. And by doing so, you can get a better price, because as soon as 2 or more buyers are assembled in one room, a fair price will be with you. Because they compete against each other. They don't compete against the seller, they compete against each other, and they will pay what the product is worth to them, regardless of the cost of production, because cost of production means nothing. If you grow for $6, nobody gives you $7. Cost of production is nothing, it doesn't matter. Cost of production has only to do with profit. If you sell for less, then you produce, you go out of business. You sell for more, then you produce, you're in. It has nothing to do with the final price. It's simply the economics of running a business. So the system that we have built at Cannamerx allows exactly that. You have an auction platform that cannot be manipulated, because auctions are timed. You put a fixed price, you put the maximum price, you put all the information that is needed for anybody to make a decision, and then your buyers bid on it. Not just one buyer, although if you don't have good product, you may not get much, but if you have decent product and your minimum price is not too outrageous, 2 or 3 buyers will drive the price up. And the result is that the low-cost producers will make a lot of money. And that's fair. They've figured out how to drive down the cost, so they should make more money. That's a reward for their good work. And the higher-cost producers, as long as they are still producing at a lower cost than the value of the product, can still make a living. And the result is that more people can enter the industry, and that more people at the grower side, for example, here in Colombia or elsewhere, can actually enter the industry and make a living, and make a good living, by growing cannabis. What it also does, it allows specialization. By having commodity prices, you have companies specialize on what they do best, because they no longer have to vertically integrate. They no longer have to grow their own product that they want to extract, that they want to package, and they want to market, and want to sell. They buy, like a reasonable company does, from the best source they can find. And by having like a centralized marketplace, you can do this fairly quickly and easily. Something goes wrong with one supply. Some farmer you bought from has a harvest failure. No problem, you go somewhere else. You may pay a bit more, but at least you don't have a failure, because there's a supply chain. There's a supply in the market that isn't just inside of your own company. Now you may think this is bad for buyers. Buyers have to pay more. That won't make them happy. Instead of getting for $1, they may have to pay $3. But in the long run, it's good for buyers too. And it's good for small buyers. Because in such a system where only the sellers can offer product, like on our other platform, and no buyer can go there, hey sellers, compete with your lowest price for my 1,000 ton supply contract that I want to offer, but they simply can only buy what is for offer, small buyers have a chance. Because in this market, the big buyers buy up all the cheap product, because they can offer these great contracts, and the small buyers can't compete with that. But in a market that we have created with Cannamerx, small buyers have a chance and can get product at the same terms as a big buyer, because they compete on the same terms, because it doesn't matter how big you are. There's 100 kilo and it has a certain value, and everybody faces the same customers. It also makes more variety, as I said early on. If there's more people growing and more people in the supply chain who can make a living, not just at the lowest cost, but at a reasonable price, the more supply you have, the more variety you have, the more risk people can take, the more opportunities people can take, because they don't just have to worry about producing the absolutely cheapest than everybody else, but simply producing well. And in this situation, I mean, you are in Colombia, and I'm not sure what your prices offers are that you're getting from some companies from certain countries, but think about the fact that in Canada, we have an estimated minimum annual demand of about 1,000 tons. That is about 25 grams per person per year. 1,000 tons, that's for Canada. So you basically calculate about 25,000 tons 25 tons per million people. That is the minimum data that we have from Health Canada and Stats Canada and the budget officer of Parliament put together. So let's assume that as a minimum demand. This means that in Canada, we need 1,000 tons. But that's not what being produced, not even close. In the United States, you would need way more than that. You would need about 10,000 tons, okay? Total consumption in the European Union, in the United States, in Canada, if you assume 25 grams per person per year, is about 24,000 tons per year. How much is produced in the legal market? Not really sure. Way less than that. And yet, you future growers, you get offered supply contracts that are now, do they crack $2 for the gram? That doesn't make sense. It's not logical. Now there's a limit to how much a buyer can pay, because at some point it makes no sense. But I think if you get $2 per gram because you negotiate with them individually in Colombia, all you're going to end up with is like your coffee growers used to be 20, 30 years ago. Basically sharecroppers who have no chance to really make a decent living until the market recently changed where more variety was demanded and there were certain changes. But fundamentally, the coffee price on the exchanges didn't matter because you would pay what you would get whatever the large purchasers could squeeze you for. And that is going to happen in this industry if it continues like this with a market where everybody individually negotiates. And that is where we see is a benefit of Cannamerx for a country like Colombia, provided, of course, you get all the legal stuff out of the way and the export licenses, etc., etc., etc. But let's simply assume that you can export. You have to be very careful, and I think we can help you at Cannamerx, not to ruin your own business by being cheap. And that is why I'm here today to tell you about our system, because there's a huge opportunity for everybody in this market. There's opportunity for low-cost producers, and there's an opportunity for high-cost producers, provided we structure the market properly and we structure properly how product is traded. Thank you very much. That is a very good question, and I think it depends on the industry, how fast the industry can get their act together to actually develop standards, to agree on what's up. We're right now in Canada, we have the C45 association based, C45 is the name of the bill that legalized cannabis in Canada. We are talking about all kinds of things, and there's little things. It's not just the chemical analysis. It comes down to, and here I speak as a trading platform, it comes down to silly things like what kind of packaging do we use, right? What kind of boxes do we use? What kind of pallets do we use? What are the testing protocols? What are the sampling protocols? All this stuff matters, and all these things have to be discussed so we can have standard contracts, because right now we don't have standard contracts, especially not for green product. It will be a lot easier for oils and extracts because they're chemically pure. And it's possible that you can work your way backwards. You start with standardization of the oils and the resins, and then you work your way backwards to the raw material and you grade it based on that. I don't know. I'm not really an industry expert. I'm an economic philosopher who decided to put theory into a platform. But it's up to the industry. You can't wait for government. Government cares about food safety. Government cares about not having things go into the criminal sector. Government doesn't really care about whether it's easy for industry to do a business or not. That's up to industry. Yes?
Yes, question. I don't know if you already talked to the big players, so-called big players here in Colombia, but it seems to me that they won't be happy about a democratization of the cannabis price here in the market because it's at an very early stage. Have you talked to those big companies and presented them the opportunity of Cannamerx?
Why would it be bad for them to make more money?
But because what did you talk about that they were going to buy really cheap and then sell?
Yes, but you have to think of Colombia as an exporter to the global market. That is the future. I mean, you have 50 million people. That's awesome. That's more than Canada. But that's not a market. You can produce, I don't know how many thousand tons per year. You can't consume that much unless your entire country goes to sleep all day. But you're an export country. And this is about developing your industry for export. and position yourself in such a way that you actually benefit from the internationalization and commodification of the cannabis market. And that helps the big guys, but it also helps the small guys.
Hello, my name is Peter, and I first want to thank you for your time. I think what you're doing is absolutely brilliant and necessary for the industry to survive, especially to give the advantage to Colombia to fixate their prices through standardization of contracts. I have a couple different questions centered around your premise of non-vertical integration, largely in part because some of our clients that we represent insist on vertical integration, especially in markets like California, which are challenged. So we have vertical integration in California as well as other states like Massachusetts, and it's proven to be an ability to maximize pound margin opposed to bifurcating your efforts. And correct, in the commoditization, the largest price compression comes at cultivation. And the way that we found in the United States is to vertically integrate, to avoid that price compression so we can go all the way through retail and absorb that maximum margin to the retail and provide the value. Could you explain a little bit of your premise of why you believe vertical integration is not the way to go? And because it will eventually lead to commoditization, correct?
Well, vertical integration, the way it is done, we're not talking about the vertical integration we have in the wheat industry, like the wheat as in grain, where you have structural vertical integration, but it's not the same companies doing everything themselves. That's different. There's market power vertical integration in the wheat industry. You have independent farmers, you have independent millers to some degree, but you have the ABCD traders who basically control everything, but they don't own everything. Okay? There's an argument to be made to control the supply chain, but I think owning the supply chain puts you at a great risk. If all your internal planning depends entirely on what you can produce, and you get mildew, where to get product, what you do with your contracts, you become vulnerable. You become a closed garden, become vulnerable. I understand the argument for it in the short run, especially in light of the cost of doing business, the lack of resources. Anybody who has a good grower will keep them and make sure they don't go anywhere else. Sure. Sure, if you have good genetics and you have control over that, and your IP is such that you actually have this very desirable product that you marketed out the road, yes, you can make money. I mean, Monsanto makes good money. Bayer makes good money, but they don't grow corn. They sell premium corn seeds that are used by others. Why do all the other stuff that adds more complexity? It's a question of complexity. The more you do, the more goes wrong. The more you focus, you become more dependent on others, but the less your risk of things going wrong becomes because you can focus on the things you're really good at. So I think in the short run, the vertical integration does make sense, but it has risk for the companies themselves, and it has significant risk for the market as a whole. And I personally don't think that vertical integration is sustainable. Now, that's my opinion. I may be wrong. How many economists have you met who are wrong about the future of the market? So this is simply my take, and it's a justification for what we are doing. Okay. Yes.
I think you're absolutely correct about vertical integration along being a doomed model. But what I wanted to ask you was, are you going to be able to, are you going, oh, sorry. My name is John Domanic, and we're a licensed producer in Colombia. What I wanted to ask you was, do you see the emergence of local volatility models of sub-exchanges that will allow us to take into account certain conditions and allow us to do aggregations, which we can then bundle and sell on an international basis? I mean, I look at you as somebody who knows a lot more about this than I ever could because you have the time to focus on it, right? But it'd be interesting to see what, if any, views you've come upon this, if you have any perspective or insight into this.
I hope this answers your question. So there's one model that I wish would probably come up in the cannabis industry, and it is a pool system. Like the wheat pools, like the old wheat pools where you would have either on a co-op basis or on a for-profit basis, somebody who specializes on the high capital intensive aspects of the supply chain, such as drying, packaging, extraction, packaging for the extraction, then bringing it to market. If you're a farmer, you don't want to do that. You don't want to spend $5 million on an extraction equipment that you use once or twice a year. That makes absolutely no sense. But if you have somebody have a big installation where they can use a lot of product and you have people shipping it there, the marginal cost of extraction and processing and packaging goes down, and the margin for the farmer goes up because all he has to do is bring this stuff to market and bring it to the pool or the co-op. So I hope that answers your question, because it deals with how you deal with local markets where people don't necessarily can access the international markets, although we think that with our system where everybody can sell their own product without a broker, you can actually sell your product to an international market, provided you have a good FOB. So the local pools could be the FOB for delivery, because nobody wants to go up in the Sierra to pick up product. They want to go somewhere where they can use a big truck. So yes, these structures are absolutely necessary and they create efficiencies. I hope that answers your question.
Thank you very much.
My name is Michel Dab. I'm the head of global business for Cannamerx, and our valiant CEO has meetings this afternoon, but we're here till Tuesday, and I know a lot of you have a lot of questions, so.
Okay, please.
Yes, hello, my name is Guillermo Bellutini. My question is, your platform uses forwards or future contracts or standardization contracts or options. I would like to know about that.
Thank you for asking. That is actually something I didn't get to. Our platform only uses forward auctions. Originally, they're simpler to program, let's be honest here. But then we realized this is the only way to make sure that growers and sellers can get a good price, because they determine how much they want to sell, and buyers are anonymous. You don't know who's bidding on your product until they buy it. So they can't do this whole spiel they like to do with farmers. Miguel, if you sell me all this product for this good a price, I come back next year and I'm going to give you a much better price than that. That never happens. So there's only forward auction. We do long-term contracts. So if you want to sell product into the future and you don't just want an LOI that is worth nothing probably, we can structure an auction for you. And you tell us what the conditions are, what your deposits are, etc. And then we can invite your potential buyers and the people that we know to bid on this supply. And we have done that. But again, it's only forward auctions. We don't want to have the reverse auction, because they drive the prices down real fast and goes back to the problem that we had. It's about how you structure the trading system itself that has huge ramifications onto the structure of the market at large.